Hello everyone, I hope we are all well and welcome back to a new video. In this video, I'm going to be breaking down the Great British Pound USD shorts, which I shared within my premium Discord on Friday the 16th of May. These shorts were executed during London kill zone. We caught the high of the day and ridden price down to a previous daily low. Just using our classical sell day model, GBPUSD actually presented a very perfect textbook setup for us on Friday. So yeah, I'm just going to break it down briefly, not go into too much detail because I'm trying to keep this video short and sweet, but also provide value within this. So I'm going to be doing more videos within the free Discord, as I want to grow the community and just help as many people as I can and connect with more people. So yeah, I hope you take some sort of value away from how I approach the market on a daily basis. So as usual, I start off on the higher time frames. I do top-down analysis. On the higher time frame, I'm trying to establish where we are at in terms of price. Have we recently just mitigated a higher time frame level of supply? Have we just swept a key level of higher time frame liquidity? Have we just filled some market inefficiency on the higher time frame? Just trying to figure out, what the current higher time frame intention is. So yeah, I'm just trying to understand what the higher time frame is wanting to do in terms of the next move, and then I obviously follow through with that on the lower time frame and obviously get extra confirmation on my lower time frame and stack confluences on them lower time frames, well, on all of my time frames, to actually build my trade ideas. So on the daily, what we can see is recently the market has had a large injection of demand and we've had a nice move onto the upside, and we've plotted in a new swing high on the daily time frame, and then the daily time frame has now obviously plotted in a new higher high, so the market is beginning to retrace. And then what we can also see is the market has actually swept a monthly high here, just briefly swept it, as you can see, just swept the liquidity there, grabbed it, and that has now caused a retracement in price. So we can actually see now we've formed this higher high here. And just going off expectational order flow, we know that when a higher high is formed in a bullish market, we know that the market is going to want to pull back at some point into discounted price zones, so the market can then attempt to print in a new higher low, for example like this, and continue with the current bull trend on the higher time frame. So yeah, going off that basis, I can now draw in my swing low to my swing high on the daily time frame at the moment, and I can get rid of that nasty circle as I don't like drawing in them. And yeah, now I've got my current daily trading range, and I can currently see that price is in premium. So right now, looking for longs for me would not be ideal, although we are in a bullish market on the high time frame, and it's just because obviously we have recently had a large move onto the upside, so price is clearly exhausted now from that bullish move, so we could now potentially see price retrace on that higher time frame into discounted zones, into discount pricing. Just write that in here. So yeah, and then we can also see as well on the daily here, we have some market inefficiency below. We have some fair value gaps which the market is going to want to fill, and these will act as a magnet towards price, so price will slowly gravitate back towards these inefficient areas to make price efficient again, collect the liquidity which was skipped on this up move, and then potentially react off it and maybe continue long. But yeah, from right now what we can see is price is currently exhausted from the recent bullish move. We can see we've just plotted in a daily higher high, we've just swept a monthly high also, which has then caused a reaction for price to start retracing, and we can see that sellers are starting to step in as we are in premium pricing. So right now I would not be interested in longs despite the current higher time frame trend. We don't marry these trends. We are here to react and adapt to whatever price is currently doing. So right now I'd be more interested in shorts based off this, due to obviously we're in premium pricing and everything I just mentioned. So on the daily so far, I am obviously interested in shorts, but I'm not just going to enter a random short position. I'm going to build upon this idea on the lower time frame and stack my confluences to actually confirm a setup. So now I will go on to the 4 hour to actually get confirmation that price is beginning to pull back on our daily. So I can go on to the 4 hour now and get a more detailed view at the current price action on this time frame, and I could look to see if we have shifted bearish and to see if supply has took control since mitigating the daily, since sweeping the monthly high and creating the daily high here. So here we can see we have this last BOS onto the upside, this liquidity grab here as we grab the monthly high also. That then causes price to retrace back into demand, and this is quite a key demand level right now because it's the demand that caused the most recent break of structure on the 4 hour. So if price was going to continue with the current uptrend on the 4 hour, we'd more than likely want to see price obviously react off demand and then continue up to take out this higher high. But what we can actually see is we get the reaction because supply and demand will always be reacted with, and then that drives price into supply, and then we see price actually respected here, and then we see price go on to actually break the demand, causing a demand failure and causing an order flow shift here. So that has actually gave us the indication that price, the bullish momentum is currently exhausted, so there's a potential reversal as price may want to pull back. So we've got an order flow shift here, so our 4 hour has actually shifted from bullish to bearish as we can see supply took control of the market here, causing a demand failure, and we've actually plotted in a lower low, which is of course bearish order flow, bearish market structure. So now I would be more interested in shorts, and then we can actually see we've got a supply chain which is built and which is currently being respected. As you can see, price pulled back into supply, we get a reaction to supply that causes the demand failure. We then plot in a new 4 hour low, and then price has retraced back into supply, and we've got a nice reaction to it. You can then see prices then being driven into a bullish fair value gap. Prices reacted off this bullish fair value gap, and then price is now being driven back into a 4 hour order block. We can see we have a 4 hour OB here which price is currently reacting off. So we've now built more confirmation for these shorts, as we can see that supply has clearly took control of the market here as we have had a demand failure. Not to say it has fully took control, as you don't know until you have at least 2 demand failures, but it is definitely a strong indication that price is beginning to reverse and that supply is starting to take control. And then obviously just going off the other confluences that we've got on the daily time frame so far, it just makes sense and everything is aligning for these short ideas that we have currently building. So obviously we don't trade at random times. I only trade at kill zone times, so during the London kill zone or the New York kill zone, as I'm either trying to catch the low or high of the day during London, or maybe sometimes I'm trying to catch that low or high of the day during New York, depending on what happened during London. So during the London session, I use the power of 3 approach. So I use the Wyckoff methodology, where we use the accumulation, manipulation, and distribution. And yeah, we look for a classical sell day based off Asia highs being swept, and then a mitigation of a point of interest, and then a lower time frame order flow shift to confirm the setup, and then we obviously look for more draws on liquidity, etc. But we'll get into that as we get onto these lower time frames. So now we'll go on to the hourly just to refine this current supply that we're in and get a more detailed view of what is actually happening now in front of us on the chart. So we can actually refine this supply now to the last pivot up before the supply was injected into the market, and we can now refine this to a 1 hour point of interest. And yeah, we can also do our candle range theory. So we like to mark up the daily high and the daily low. So if I go on to the 4 hour now, I can go to this candlestick here. Here it is, Thursday the 15th of May. Here is the low of that day. So this is our previous daily low. And then the top of that candle wick is the previous daily high, Thursday the 15th of May. As you can see, that is the previous daily high. So the previous daily low and the previous daily high are just key levels of liquidity. Theory is basically when a previous daily high is swept, then the previous daily low will be magnetizing price onto the downside, acting as a draw on liquidity, a higher time frame draw on liquidity, and then vice versa for the flip side. If a previous daily low is swept, then the previous daily high will be then beginning to start magnetizing price onto the upside. But it has to obviously align with other confluences and just, yeah, it has to align with your current chart, obviously. So here we can see everything aligns perfectly. We can see our previous daily high has been swept as we've mitigated into the supply chain, and we have our previous daily low left open. So now we just want to see our classical sell day present itself during London, and we'll be happy to take these shorts. So we now go on to our lower time frames. So we're on to the 15-minute now, and we can just draw up that previous daily low correctly, and our previous daily high correctly. So now we are in the London session. We obviously mark up our Asia range lows and our Asia range highs. When we are looking at a classical sell day, what we ideally like to see is Asia highs swept first, mitigation of supply, point of interest, and then a lower time frame order flow shift in our favor to confirm the setup. So we've got Asia range highs, and then we can see we've got a nice Asia range lows here, and this was a very clean Asia range, to be honest, as it's small. So now we are using the Wyckoff methodology of phase 1, where we've got the accumulation of price, and then we usually see the manipulation during the Frankfurt session, which is the European session. This little red box that I'm drawing in is my manipulation phase. As you can see, this is the manipulation phase. Price is being manipulated up, sweeping Asia highs, also sweeping the previous daily high. So price definitely has more than enough fuel to distribute onto the downside now, as we have swept a ton of liquidity going into this supply. And then now we have our opposing liquidity drawing price onto the downside, acting as a magnet. We have the Asia lows, which is a key level of time-based liquidity. This is our lower time frame drawing liquidity. So what you should always ask yourself when you're getting into a trade is, what is my current drawing liquidity on my lower time frame and on my higher time frame, as these are your targets. Obviously what you target is up to you, and obviously whether you want to take partials at certain points is up to you. At Asia lows, I take partials, and then I carry the rest of the trade risk free down to the previous daily low. So yeah, we now have our previous daily low also acting as our higher time frame drawing liquidity, which will be acting as a magnet for price to draw price onto the downside. So yeah, obviously when you get into a trade, you actually want to see something which is going to actually draw price in your favor, in the way you're actually anticipating price to move. Because if you can't see anything actually acting as a magnet, then you're more than likely just looking at nothing. So yeah, now we're in the 1 hour POI, we're in supply, we've had the manipulation of Asia highs. We're now going to look for a lower time frame order flow shift. So my usual entry time frame is the 2 minute, and then sometimes the 5 minute. But on this specific day, it was quite a choppy 2 minute time frame, and then also the 5 minute wasn't displaying too much either, so it was also choppy. So I had to go to the 1 minute. Sometimes you're going to have to do that. You're going to have to react and adapt, because yeah, you may not be comfortable getting in on something on the lower time frame that isn't displaying. And to be honest, this isn't my usual kind of lower time frame entry model, but because of all the other confluences that I stacked so far, I was happy to take this trade. But I didn't actually take the first entry anyway. I actually waited for another low to be taken, so you'll see that in a moment. So what we see is here is on the 1 minute time frame, price comes into the 1 hour supply, and then we start to see a large move onto the downside on the 1 minute time frame. We see some selling momentum being injected into the market here, so I could see some volume being added to the market here, which made me start to prepare for an entry. And then what I could also see is we've swept this high. So on the 1 minute, obviously we had an expansion up, we created a high here, we then pulled back, created a higher low, and then had an expansion up. But we didn't actually close above this high, so this is why I wasn't comfortable with entering off this supply here, off the first entry. So I waited for a reaction to this supply, and I wanted to see this low taken before actually getting in an entry, just because I would prefer to see a candle closure on the 1 minute above this high, and then actually, obviously I class that as an actual order flow shift. But because we didn't actually get the candle closure above that, it's just classed as a liquidity grab to me. So price could actually continue up and go deeper into the supply, and I could end up getting into these sells too early, as we're not even in the 50% range of the 1 hour POI yet. So yeah, I was a bit cautious and aware of that also. As you can see, we get brought into supply, we get a nice reaction to it, and price continues onto the downside, taking this low. So we can see that now supply is taking control on the 1 minute. So I was just happy to take this nice entry because it was so close to this this high here, which was acting as my strong high. I was classifying this as a 1 minute strong high now, and my entry was at the open of that supply, my stop loss was just above that high, and then my take profit one was at Asia lows, where I obviously took partials, and then my full take profit was at the previous daily low, which is the higher time frame draw on liquidity. But yeah, this is my lower time frame draw on liquidity, the Asia lows, which is TP1. So we'll mark that up. And then we have full TP at TP2, which is our higher time frame draw on liquidity. So now we've had obviously accumulation, manipulation, and now we're expecting the distribution onto the downside. We've obviously stacked multiple confluences on multiple time frames to build this high probability trade idea. And yeah, so this is the entry that I took. As you can see, we got a lovely reaction to my entry. We was in zero drawdown, a lovely sniper entry. And then also, just to touch up on some other bits, I wasn't going to go into too much detail, but this, if you're not aware of what this candlestick is on the right here, some of you may be confused. It's called the power of 3 candle. This is basically every morning at 6 AM UK time, we get a new 4-hour candle form, and I'm basically trying to catch either the open high of that candle or the open low of that candle. So in this case, was looking at shorts, so I was trying to catch the open high of this 4-hour candle. So I just have it, this indicator basically just has it next to price, and it's just nice to basically have there, because you can see the 4-hour candle forming as you're live trading, and you can see you basically yourself catching the top wick of it, which is very nice. So as you can see, look here, I've caught the very top wick of the new 4-hour candle formation, and eventually you'll see it turn into a nice bearish candle. As you can see now, it's turned grey, and it is now a bearish candle. So yeah, and then I also use other indicators. We'll go more into detail on these in future videos, but I also use the average daily range indicator, which gives me the average daily range for price on the specific day, which is also around TP2, which is just an extra confluence also. And then I also use another indicator which separates our days, just to make marking up the high of the day and the low of the day quite easier, and just so I know which day I'm on. But yeah, we'll just play price now, and as you can see, full TP is eventually smacked at around like 3:30. And as you can see, it was a very precise TP. As soon as we take the previous daily low look, we get a reaction to taking that, because we've obviously just took a lot of liquidity there. So then we get a reaction to the very extreme of demand down here, and then price retraces straight back onto the upside towards our entry. So it was a perfect take profit. So yeah, I hope you will take some value away from this and learn something new. I will be making more videos of this. It will be nice to get this Discord active again. I haven't really been focused on the Discord or anything too much recently. Just been focused on my own trading and just living life, to be honest. But yeah, I'm going to be getting back into more content creation, as I do find it fun, and it is a good hobby to have on the side. And I do want to grow more of a trading community and actually, you know, help others, and maybe, you know, get people trading this strategy, because it'd be nice to see everyone in this community taking these style of trades each day. Obviously this sort of setup won't present every day. This is very clean. This is a very textbook setup for me, but when it does present, you've got to be able to capitalize off this sort of setup and make sure you ride your winners. And yeah, obviously we have multiple, well, I have multiple entry models that I take within the market. This isn't the only entry model also. So yeah, I know how to react and adapt to multiple different scenarios. It's just obviously based on different key factors on different time frames. But yeah, as I release more of these sort of breakdowns into the community, I'm sure you'll learn a lot more and begin to grasp my sort of approach to the market as a whole. But yeah, this should have broken down a lot of key factors to it. And yeah, if you're already an experienced trader, you'll know exactly what I'm talking about. So yeah, hopefully you will take some value away from it. Please make sure you drop a fire reaction or something under the Discord message, just so I can show people, well, just so I can see people have actually watched it. So yeah, that would be great. So I appreciate everything, all your support, and it will be nice to see more people active in the group again. I'm going to be doing my best to be active. I'm going to be sharing more forecasts and more charts and more breakdowns. I've got a lot of ideas. I want to be doing more lives with the community, and just connecting with more people, and yeah, just building a strong, solid community of traders that can genuinely react and adapt to price, because there's a lot of people online right now screaming all sorts of concepts, and a lot of people are just learning about FVGs, invert FVGs, all this and that, smart money concepts, ICT concepts, but not everyone knows how to actually trade these in live conditions. So just be wary of who you learn from, and the content you actually consume, because yeah, it can really like affect your trading journey, because you could see someone as the holy grail but really they're not. Do you know what I mean? So yeah, have a great week, guys. I hope, like I say, I hope you take some value away from this.